All right, a quick little mini series here that I'm going to do should be a 5-part series on how you can become profitable, what it takes, what you need to focus on to be profitable. I don't care if you just started, if you started trading a week ago, or if you've been trading for a year and a half. If you're not making money, you're probably not focused on the right things. And in this series, I'm going to show you what you need to focus on. There are 3 things that you need to make in this game. Pulling it off is simple. What it requires to be consistent and to make money in trading is very simple. It's 3 things, but these 3 things are difficult to do. You got to understand there's a big difference between something being simple and something being hard. Simple means, again, there is 3 things that you have to master. You do not need to go to university for 10 years like a doctor and learn how the entire brain and heart works. No, you need to know how to do 3 things, and that is it. But these 3 things are not easy. These are very hard to do. Psychology being the hardest. Risk management is also not too easy. Finding a good strategy and edge, back testing that 300 times is hard. It's time consuming. It's not easy, but it's simple. Here's your target. Here's what you need to do. You know what you need to do. So let's go over it really quick. Your first goal is going to be to find a strategy or an edge in the market. What is that? Well, it is a simple system that gives you an outcome of probabilities. If we look at the chart here, instead of coming in every day and just guessing, just picking up random positions, seeing a green candle and saying, oh, I'm going to get in here, and trying to catch moves like these, a strategy tells you how to position yourself if A, B, and C happen. That's all it is. Now, there's 100 different strategies out there. Do not get caught up, switching from strategy to strategy. You need to pick one. They all perform the same as long as you manage your risk. You really don't need to be picky about this. There's moving averages, there's smart money concepts, Bollinger Bands, there's hundreds of indicators, patterns, wedges, support and resistance, supply and demand. It really doesn't matter at the end of the day because risk management and psychology is what's going to be important. But a strategy, it just gives you an outcome. It gives you a set number of probabilities that you can look at. So I know that if A, B, and C happens, if I position myself here, if I go long here, I'm going to be right 70% of the time. Now, there is no such thing as a 100% win rate. Even a 95% win rate is almost damn near impossible for the average retail trader. Please do not go on YouTube, and fall for the clickbait thumbnails that say, oh, 95% win rate trading strategy, undefeated strategy. That's all horseshit. Don't get caught up in these holy grail one and done, 20-minute YouTube video strategies because that's all it is. It's designed to get you to click on it. It's designed to get your attention, and that's that. Here's my strategy, for example. I have back tested this 300 times. I have a 66% win rate. So I know that 66% of the time this plays out. Here's what I watch for. I wait for a sweep of a high, and I wait for the market to give me a setup. My setup is once we sweep the high, I want to see a market structure shift. On the 1 minute, as you can see, we go from bullish market structure to bearish market structure. We break this low, retrace into a fair value gap, and we sell off. I know from my back testing, because I've put in the work, I know that this plays out 66% of the time. I don't know that this trade is going to work out. When I get into this, I have zero certainty. I have no idea whether it's going to work out or not. But I am aware that 66% of the time it is going to play out. That's all an edge is. That's what a strategy is. It's not some holy grail system. It's not you predicting where the market's going to go every single time. It's just a set of probabilities. That's all that it is. Step 2, risk management. This is the most important aspect of your trading. 90% of you who aren't profitable, I guarantee that if you employed some simple risk management, you would at least be a break-even trader. It's what took me from, blowing 6 evaluations a month, sometimes 2 or 3 in a day. Risk management took me from being a bad losing trader to break even. Simple as that. Just by managing risk. I didn't have a strategy. I was essentially just gambling every day. trying to make that quick buck because I wasn't focused on the right things. But as soon as I adopted some simple risk management, I immediately went to a break-even trader. Now, the reason that this is important is because you are going to make mistakes. There's a whole lot of reasons for you to lose a trade. You're going to make a mistake. Maybe you're still learning. Maybe you didn't see something right. Or your edge just doesn't play out. If you remember what I said a second ago about my edge, I'm only right 66% of the time. I have a 66% win rate. So what does that mean? We'll do the math. That means that 34% of the time I'm wrong. I lose. That's right, I lose. Every trader in the market loses. Nobody has a 100% win rate. It does not exist. So what does risk management do for me then? Well, it protects me from those losers. It doesn't matter if you are a hedge fund manager, if you're a big bank, you're going to have losers. How do you not blow your account or bleed? Because you have good risk management. You can see here, TradingView has these beautiful tools which you can find on the sidebar on the left here. What is risk management? Really simply, you'll learn more about it in the video, but to put it really simply, if I risk 20 points to make 40, that is a 2-to-1. It is simply put your reward divided by what you risked to get that reward, and it spits out a number. This is a 2-to-1 if you do that math. Looking at a long position, if I risk 10 points to make 30 points, we'll do the math before we even look at it. 30 divided by 10 is what? Well, that ends up being 3. This is so important. And what you'll learn about in risk management, which is also very important, is that there's two sides to it. It's not about just setting stops and getting out and risking a consistent amount. It is also about what is equally important is that you hold your winners. You allow your take profits to run. And you're going to learn why that's so important when we do some math in the risk management video, and you'll get there. But again, risk management is the most important part. I encourage you, if you already have an edge, if you have a strategy that you've back tested and it's proven and you're not making money, I highly encourage that you check your risk management system, because there's a 95% chance that you are not managing risk well enough, and that is causing your account to bleed. Part 3, and this is the hardest, is psychology. Everybody will struggle with psychology when they are in the beginning. Trading goes against all of our human instincts. Fear, greed, impatience, nerves, all of this is going to have a huge effect on your portfolio. You're going to overtrade. You're going to be fearful. You're not going to let your edge play out. This is all removed by experience and building good habits. And you're going to learn in the psychology part how to build these good habits, what habits you need, and how you can really refine your psychology and improve it. But, as you're a beginner trader, there's going to be so many times where your edge has not shown you a single thing, but you're seeing red candles, you're seeing the market start to move in a direction. And you're going to start thinking, oh my God, I'm going to get in right here, and you start imagining how much money you can make. You're looking at you're imagining 100-point move. This is going to happen to you a lot. It happened to me a lot. You're going to see the market start to move in a direction. You're going to think that you're going to catch the next 2008 stock market crash. You think you're going to be the next Michael Burry, a billionaire. You start thinking of all the cool things you're going to buy. Wow, I'm going to buy a Lambo. I'm going to buy a house. I'm going to win the lottery here. That's going to happen to a lot of you, and I'll touch on this specifically in the psychology part of this series. But this is what I mean by bad psychology. Things like this, praying for, big, massive dumps like this, thinking that you're going to win the lottery is one of the biggest parts of psychology that people struggle with. Not allowing your edge to play out. Psychology is simply the glue that holds your risk management and your strategy together. Risk management and your edge in the market are honestly not that difficult to figure out. You take a couple months, you study, you go out and you backtest. You backtest 200 or 300 times. This is all just technical stuff that can be figured out with a bit of hard work. What psychology is that it is executing that system consistently, day in and day out. When you finish backtesting and you see the results of 200 to 300 trades of your system, you know that you have a profitable system. You just backtested it. You know that over 300 trades, if you execute that edge every day consistently, you are going to make a lot of money. Now, psychology is being patient. It is coming into the market every day, waiting for that setup to play out, executing it every time that it shows up, not over trading, not under trading, being confident. It's also understanding that your strategy isn't perfect. You're going to have periods of drawdown. Things aren't going to go your way. You might have a red week, a red day, a red month, you name it. Good psychology is keeping your head up through those periods of drawdown and not jumping ship and going to the next system. It is having confidence in your backtesting, looking at your backtesting results and saying, okay, I'm in a period of drawdown right now, but I know that if I stick to my system, I'm going to make money in the long term. That is what good psychology is all about. So there's the 3 pillars of successful trading: strategy, your edge in the market, risk management, and psychology. I'm going to briefly touch on all 3 of these in separate videos. This should give you an idea. This series isn't what's going to make you profitable. It's just a short, quick, maybe hour-long top series, but it's going to give you an idea of what you need to focus on. If you're not focusing on these 3 things, if you're not trying to master each one of these, if you're just trying to gamble and make a quick buck, I got bad news for you. You're not going to do it. It's just you can't get in this game and try to make a quick dollar. If that's your goal, I highly recommend you take your money, go to the local casino, and put it all on 36. You have your odds of making quick cash at the casino are way higher than making it in the stock market. Better yet, take that money and just invest it into a long-term stock. Buy an ETF. Simple as that. You're not going to get into the trading game and try and make a quick buck. This game requires consistency, discipline, and hard work. And that is what these 3 will get you.